Hey guys, it's Saturday. I'm out walking the dog, so figured I will give you a quick update on the market. So remember last week I told you that equity market was oversold, so I was expecting possibly a bounce in the market, but that bounce may not last, right? So that's almost exactly what happened. So this week, at the beginning of the week, we had a very strong rebound in the equity market, but then Friday, the U.S. unemployment number and a payroll number comes out for September, and that was a positive surprise for the market. It was better than expected. Unemployment was only like 3.5% again. So that, signaled to the market that Fed can continue tightening, right? So that was a negative surprise for the market, and the market sell off, obviously. So where do we go from here? I want to tell you my thoughts for the very short term, and medium term. All right. For the very short term, meaning the next week, because we had a very strong sell-off for last Friday, so it may just continue for a couple more days or for a few more days just because there's momentum in the market. It's just like when the car is going one direction, it's very hard for it to just have a full stop and turn the other way around. So that's the just momentum effect. So very short term. And also because next week we will have the CPI, US CPI and PPI number comes out, and that is usually a big factor for the market, given that the Fed policy is completely inflation driven right now, right? So if inflation number surprises to the upside, we may see some more sell-off. That's another risk for the next week. So that's the very short term. For the short term though, short term meaning the next month, the coming month, I'm actually expecting, so this is my baseline assumption, is that I'm expecting some sort of a local bottom. Why? Because of several reasons. Okay, first of all, we have the next FOMC meeting, Fed meeting. It's going to be the first week of November. So that's still like 20 days away. All right. So that gives a little bit of breathing room to the market. And also, what's the Fed going to do? They're not going to, like right now, the highest expectation is another 75 basis point increase. I don't think they're going to go beyond that. And the 75 is already being expected by the market. So if that comes out, it will be a non-event, right? So in the previous several Fed meetings, you've seen that at least two of the three in the past year, we've seen like after the Fed meeting, we had a short rebound, actually short rally of the market, because that's the buy the news event, right? Sell the rumor, buy the news event. So that's number one. Number two, if you look at the U.S. economy right now, it's really not bad, because and the unemployment number confirms that. And we are coming up on the next earnings season for the equity market. That means the earnings season may not be that terrible, unlike some people were forecasting, right? So you will see some terrible numbers from some companies for sure, but it may not be that bad. So, and thirdly, if you look at the number of stocks that has held up above the 200-day moving average or the 50-day moving average right now, it's actually above the June-July low. That June-July low was the low point that I put in. All right. So right now that number has held up about 21, 22% of stocks above the 200-day moving average, and it doesn't look like it wants to go lower right now, at least in the short term, right? So number four, October historically is not a bad month for the market. And number five, if you look at equity, the crypto market, it has held up pretty well over the past, I would say, 10 days or so, right? So it tells you there is a ability and willingness in the market to actually buy the dip. So I take that as a sentiment indicator, and all these markets are interconnected right now because all are basically the same bunch of investors. So those are like short-term reasons that I think my baseline is I expect some kind of local bottom to be put in this coming month, either October or early November. All right. Medium term, nothing has changed. We're still in a bear market, and the Fed is still tightening. They're still selling assets. Quantitative tightening is ongoing and rate hike is ongoing and nothing has changed. And if you look at historically, the big bear markets, right? After the dot-com boom, how long did that bear market last? 2.5 years. After 2008 crisis, how long did that bear market last? 1.5 years. How long have we lasted this bear market so far? 10 months. Okay? And we are in the biggest tightening cycle in monetary policy over the past 2 decades. So go figure, all right? So that's the medium term. In other words, bottom line is very short term. Next week, we may see more sell-off just because of the market momentum and because there's some risk factor there from the September CPI number that will come out middle of next week. In the short term, for the coming month, I expect, my baseline is possibly some kind of local bottom being put in. Medium term, nothing has changed. We're still in the bear market. And again, this is for your information. I'm often wrong, and when there are new data comes out, I change my opinion pretty quickly. Okay, but that's all for now. I will talk to you later. Bye.